Thank you for joining our webinar on SPCPs and using data to design a written plan. I'm Lori Benner. I'm the Associate Vice President of Housing and Community Development with the National Fair Housing Alliance. As many of you know, a couple of years ago, NAFA partnered with the Mortgage Bankers Association and the Homeownership Council of America to create a website, and that's spcptoolkit.com. And that was intended to be a resource to really walk lenders step by step through the process of creating their own SPCP. And of course, as we all know, data is a big piece of that. And so to that end, we partnered with the Urban Institute to create a toolkit within the toolkit, if you will. So it's a data resource that includes really valuable information from the top 50 largest MSAs in the country. So I'm joined today by June Zhu. She is the non-resident fellow of the Housing Finance Policy Center with the Urban Institute, and also clinical associate professor of finance with Indiana University. And she will walk us through the new toolkit, explain it, and show some great examples from it. And then we will be joined by Elsie Howard, who is the Associate Lead Underwriting for Racial Justice with Beneficial State Foundation. And so Elsie will talk a little bit about their SPCP and the process that her organization went through to create it and vet it with regulatory agencies, and what that process looked like. And so after those two presentations, all three of us will come back and we'll have some time for Q&A. So feel free in the meantime, as we're going along, to drop your questions in the Q&A box, and we will address them towards the end. So with that, I'll go ahead and turn it over to June to begin her presentation. Thank you.
All right, thank you so much, Lori. Good afternoon, everyone. I'm honored to present today. So let me first share my screen. Okay. All right, I just shared my screen. Can you guys see my screen? Okay. All right, so the topic is very important, and that affects many communities. That's a special purpose credit program. And I want to point it out that is my discussion is grounded in a comprehensive research and analysis conducted by Urban Institute and NAFA. And this is done together with my wonderful colleagues, Daniel, JP, Aniket, John, and Yannicka. So my colleagues, please feel free to jump in if there's anything you want to add to the topic. Audience, we're going to have the Q&A session. Please remember, easy question for me and tough question for my colleagues. All right, so let me first give you the introduction. The SPCP toolkit we have, this will determine the need for SPCP, and this is consistent with the guidance by the agency for a written plan and also a broad analysis. So what you can see is the right-hand side. This right-hand side shows our landing page. Okay, so if you go to urban.org project special purpose credit program toolkit, this is our landing page. And from this landing page, we have three components. The first one, we ask the question, why we use SPCP in home lending. And this is the market and disparity analysis. We document disparities in the home ownership and loan approval rates by different race, ethnicity. And we provide some background and data evidence for the need of SPCP. And next thing is the target market analysis. That is, we analyze the likely share of renting households of color who could be served by different options for eligibility. For example, what if we want to focus on neighborhood, like majority minority census tracts? In this case, how many households of color can be served? Lastly, we actually provide a white paper. As we know that the flow of the lender's written plan is very important. And the white paper provides some background at the national level for a broad analysis that can be used in the lender's written plan. Okay, so the first thing I want to actually guide you through is the market and disparity data analysis. This is our first component. How can you get to the market disparity analysis? There's two different ways you can do. The first way is if you dive deeper into our landing page. So this is our landing page, and take a look at the first session. That's a market and disparity analysis. And this is the place you can pick one MSA. We have 50 MSAs. So you can just pick one of the MSA, and let's just pick Los Angeles. If you pick Los Angeles, right-hand side, that will be the market and disparity analysis for Los Angeles. And we start with some background, so you will see some background of Los Angeles, and then we dive deeper into different sections, or maybe you can call it, different topics. Well, if you're interested in different charts, and you might find this one is a little bit smaller, so let me actually make it a little bit larger. Okay, so this is our first chart, and this chart shows the home ownership rate. And home ownership rate for this in Los Angeles, we can see is large gaps in the home ownership rate persist between different race groups as the household of color face a significant disadvantage relative to the households, white households. So let me give you the white and the black as an example. I have the black is indicated by 32% in 2021. So that's black. And I have white is here. It's 57%. Its home ownership rate for white is 57% in 2021. Okay, so let's do the math. 32% to 57%. That's 25 percentage point difference. Okay, so that's a huge gap. So that is our first chart for the home ownership gap. And you may also notice something that is for each chart. For most of the charts, we provide two different charts. If you click Los Angeles, we're going to show you the Los Angeles chart. And if you click national, we actually give you the national chart. So you can do a comparison between MSA and the national as well. Okay, so that is some information about our charts. Now, in terms of these sections, let me talk about different sections we have. We are on the landing page and towards the Los Angeles website, we have 4 different sections or 4 different topics. We start with giving some data points for the gaps. So you have homeownership gap, and you also have mortgage application gap. And then we dive deeper into the disparities. The first one is the wealth disparity. And then we also provide some data points for the income disparity. And we conclude with the credit disparity. Now, I want to point out is for each chart, for most of the chart, we actually directly give punchlines. So the users would not need to guess what's going on in this chart. So let me use this chart as an example. This chart directly shows what is the mortgage denial rate by race. Well, a good comparison, you may already notice is the borrower of color, right? So it's 12.3%. And if you take a look at the bar right-hand side, it's the white households, it's 9.4%, and the black is right to the whites, and that's 16.5%. And as indicated by the title, and that is our punchline. So the punchline is indicated by the title, that is a borrower of color are much more likely to have their purchase application denied. And especially in Los Angeles, what is a number? That is for white, the denial rate is just 9.4%, but actually for the black purchase applications, that will be 16.5%. 5%. That's a huge difference. Now, let's dive deeper to the disparity analysis. And the first thing I want to show you is the wealth gap. We have so many gaps, and the first one is the wealth gap. The right-hand side I provide you is a snapshot. It's a screenshot of the it's a wealth disparity. And we start with some background, and then we dive deeper into different charts. I want to show you a couple charts. The first chart I think is very important. That is, it's the wealth disparity. We first show that the white households have disproportionately higher housing wealth. How can we read this? That is, if you focus on the blue block. So I have the blue block, which is the white households. The first bar is the white households. And the second bar in terms of the homeowner composition. And the last one, the right-hand side one, is the housing wealth. For the household composition, white households is just 36%. However, with those 36%, the white homeowners account for more than 42% of all the home buyers. And if we take a look at the wealth, the housing wealth, they actually have 53% overall housing wealth. And you can see the block for the white is in larger, right? Each one is larger. So disproportionately higher housing wealth towards the white households. On the other hand, if we take a look at Hispanic, the black one is actually shrinking. So I have 35% of the Hispanic households and only 30% homeowner. And in terms of the housing wealth, that's just 20%. So they are shrinking. But the white households housing wealth is much larger in terms of the composition. Now, I think this one is astonishing. That is, if the previous chart of the housing wealth is not sufficient enough, you feel now this is the gap. I want to show a large gap between the white and household of color. Take a look at a huge bar for the white households. And this is for the net worth. The median net worth in Los Angeles for the white is $289K. And this number can be compared just 17K for the blacks. And for the household of color, that's total, is 22K. So we can see that, it's very important compared to the white households. The households of color actually have much lower median net worth. And because of the lower net worth, the cash needed for the down payment gonna be a very, very hard barrier for the Black and the Latino households. So I showed two bar chart here. The first one, the left-hand side one, shows what will be the percentage of the households put down 5% or below. So you can imagine if we talk about a low down payment, it will be higher, much higher bar for the borrower of color. And this is what we see here. It's just 9% for the white, gonna put 5% or below. However, I have 40%, more than 40% of the Black households gonna put down 5% or below. And the number for Hispanics would be 37%. Right-hand side, instead of showing 5% or below, let's take a look at who actually put 20% down or more. And you can see is that for the Blacks, only 24% of the Blacks can actually put down 20% down payment or more. And the number for Hispanics would be 27%. Instead, we have the white is here. It's 55%. So you can see a huge gap between the white and the black. And because of that, the last thing we did for the wealth is, if this is the case, let's take a look at household of color. Do they need down payment assistance? And the answer is yes. And we find about 13% of the Blacks actually need government or nonprofit down payment assistance. And this is national level. And the number for the white borrower would be about 5.6%. Again, we still find a huge gap between the Black and white households. So this is the wealth disparity. And we dive very deep into this the wealth disparity. Now, let me just talk about a little bit about the other two disparity. The first one is income. For the income disparity, again, we still give some background at the beginning of the section, and then we take a look at different charts. For example, the first chart for the income disparity is the debt to income ratio. From the debt to income ratio, we saw the composition. If you compare just the white and the Black, and you can see that we have so many Black have much lower composition in terms of the lower debt to income ratio, right? So they have much higher possibility of getting a higher debt to income ratio for the Black. So that's the income disparity. And the second one we have is the credit disparity. And for the credit disparity, it's very important to compare the FICO and credit scores. And the first chart we show is the composition of different credit score for different race groups. So let me give you one comparison. If we compare borrower of color, white and Black, and you can see that majority of the Black borrower actually have much lower credit score compared to the white borrowers. So that will give some background about the state of the gap and disparity. And next thing we have is a target market analysis. That is, if we take a look at, if you already know which is the target, we can also provide you lots of the information about that target. So how can we get to this tool? There's two ways you can do. The first way is that if you go to our landing page, that will be the second section. That's the target market analysis. And you can directly pick one MSA. If you do that, it will give you the link to an Excel tool. Okay, so this is a very good Excel tool. A second way you can have is if you're already on our web page for one particular MSA. For example, you are on the web page for Los Angeles. What you can do is go all the way down to the end. And when you, towards the end of that web page, take a look at download the tool, okay? So if you click download the tool, this will also lead you to the Excel tool. So what is this Excel tool look like? If you download the Excel tool for Los Angeles, for example, you will have 4 different tabs. And for those 4 different tabs, the first tab is an introduction. And this is provide you some background about this tool. But I want to point out is that we have JP and myself's email address over there. So if you have any questions, is there anything unclear about this tool, you can feel free to send us emails about your question. The second tab is the target analysis. Okay, so this is a screenshot of the target analysis for the Los Angeles market. Now, I want to point out a couple sections. The first one is you need to select your criteria. Okay, so that's the first section. Once you select your criteria, then we provide you some basic number about this target. So sum of the total homeowners, sum of the total households, so on and so forth. All those detailed information. Right-hand side, we provide two sections of the table. One is in yellow and one is in green. I want to talk about those two sections. But the first thing first is you need to select the criteria. What will be your criteria for this target analysis? If you do not select anything, okay, for example, here I actually pick everything. Everything will be selected. Then you actually pick the entire MSA, which means that the yellow tables and the green tables gonna show you the entire Los Angeles market. All right, now let's find a pick. That is, I want to actually do something in terms of income side. So I want to pick something around the income, but I'm not 100% sure how to interpret track income share of AMI. I seem to understand that, but not 100% sure. Let's help you with that. That is, take a look at the left-hand side. If you're not 100% sure about the definition for that variable, click definition. Once you click definition, we're gonna give you the definition and you know how we actually did the analysis as well. So for example, track income share of the AMI. What we did is we use median household income in a particular census tract. Okay, so that will be our variable. And we compare to the area median income. And we determine, is that 50% or 50 to 80% or above 80%, right? We have a different income buckets. All right, so I did one pick, which is I'm taking a look at the median census tract income and I compare to the MSA AMI income. And I pick it to be 50% to 140% cutoff. If I do that, I show here would be two tables. Again, it's in yellow. So the table above show you a target market. Okay, so all these statistics is for that target market based on the income buckets, 50% to 140% AMI. The table below, I show an entire Los Angeles market just to do a comparison. Now, how to read those tables? Let's first take a look at the total Los Angeles. When we have the total Los Angeles, for a total of about 1.5 million non-white renters in Los Angeles. And if you take a look at the total for non-white, and this is for 50% to 140 AMI target market, it's 1.2 million non-white renters. Let's do the math. We can see that the coverage is about 78%. That is, if we use the place-based income requirement, we can cover about 78% of the total renters, non-white renters in the Los Angeles market. Moreover, this table also shows some individual race information as well. Let me give an example of the Black. Out of a total of 212K Black renters, if we use the track income share AMI 50 to 140 cutoff, we can cover, the number is here, 155K, or the coverage is 73% of the total Black renters. And we can further dive into those 73% Black renters. Let's take a look at the AMI. About 73% of the Black renters have an income level below 50%. And I also have, oh, I should look at this number actually. Okay, so let's take a look at this number. I have 52% of the Blacks have the income level below 50%. 17% would have a income level around 50% to 80%. And 19% of the Blacks gonna have the income level 80 to 140%, and 11% of the Black renters would have the income level above 140%. Now, at this point, you might have the question, we cut the data so the income level would be 50% to 140%. Why we still have Black renters have income below 50%? Well, this is because we did that is based on the place. We use the place-based criteria. We compare the median census tract income. And we have the median census tract income is between 50% to 140%. However, for those census tracts, we may still have the renters living in those census tracts with income below 50% or above 140%. We know that when you have the target market, coverage is very important, but sometimes demographic characteristics is also important. So let me talk about how you can get to the characteristics of the target market. This is the green tables. So the green tables show some summary statistics about the target market, and especially for the homeownership rate, for the denial rates. So let me give you a couple examples. Again, I picked the census tract share AMI, 50% to 140%. If I do that, I compare to the total Los Angeles market. All right, so I have for the entire Los Angeles market, I have 49% in terms of the homeownership. How about my target market? If I take a look at my target market, well, my target market, the homeownership is a little bit lower. Entire Los Angeles market, it's about 49%, and my target market would be 46%. How about the mortgage denial rates? In general, in Los Angeles, I have the mortgage denial rates is about 15.4%. And for the target market, it's a little bit higher. It's 15.9%. Now, in terms of household of color, we also provide information. For example, entire Los Angeles market, non-white, household of color, homeownership rate is 44%. Target market, your household of color, homeownership rate would be 43%. How about denial rate? Mortgage denial rate, non-white mortgage denial rate in Los Angeles, it's 16.8%. Target market, when we have the median census tract income is between 50% to 140%. I have the household of color denial rate would be 17.3%. We know that the reason why people got denied is very important. So we provide the information for the target market as well. Let me use Black, Hispanic as an example. So for example, in the target market, one of the most important reasons why the Blacks got denied is because of the DTI, debt to income ratio. 33 of the Blacks denied because of the DTI. The second reason would be the credit. 22% of the Blacks are denied because of the credit. But if you do the comparison, the story a little bit different for Hispanics. For Hispanics, debt to income ratio would be the first one. Due to the debt to income ratio, Hispanics 36% are denied. But the second reason would be incomplete information. For the Hispanics, 21% of the loans, Hispanic loans, are denied because of incomplete information. So this table shows you lots of the information in general for the loan characteristics, in general for the household characteristics as well. So that is the Excel. And the last one we have is a white paper. And the white paper talk about the evidence, and we provide the evidence for the disparities in access to the mortgage credit at the national level. How can you get to this white paper? There's two ways you can do. The first way, of course, is our landing page. If you directly go to the landing page, you have three components: market and disparity analysis. We talked about that. Target market analysis, that is our Excel tool. We talked about that. Now, if you go a little bit down, that's a written plan documentation. We provide a link, and this white paper going to give you some background at the national level, which will be very helpful for the lenders to write their written plan. This is the first way to get to the white paper. A second way is if you just do a quick Google search, the title would be Evidence of Disparities in the Access to Mortgage Credit. And when you have the access to this paper, just download the report. In this report, we give very detailed information. We provide you the background of the evidence of the disparities in access to mortgage credit. We first talk about the state of the gap, which is homeownership gap and mortgage application gaps. We also provide evidence, so this will make a case for the program and the products that address the wealth disparity. Then we move on to the cases for the products and the programs that will close the income disparity. Last but not least, we provide evidence for the products and the programs that can close credit disparity. So that is our white paper. Now, I think this is very exciting. Let me summarize what we have. We provide a SPCP toolkit, and this toolkit will determine the need for the SPCP. This is consistent with the guidance by the agency in terms of a written plan, in terms of a broad analysis. Our toolkit will give three components. The first one is a web page. The web page will give you the disparity analysis, especially for the disparity in the homeownership rate and loan application rate. The second one is a target market analysis, and that is a very exciting, interesting Excel tool. And that will give you the likely share of the renting households of color who could be served by different options for eligibility. The last one we have is a white paper, providing the background at a national level for a broad analysis that can be used in the lender's written plan. So that is everything I have for this presentation. See if you have any questions.
Yeah, thank you so much, June. So there are some questions in the chat. If we have not responded to them in writing, we haven't forgotten about you. We're going to address questions at the end. So after Elsie's presentation, June will come back with us and we'll address those questions at that point. So I hope this kind of quick overview gave you an idea of how excited we are about this data resource. So NAFA, our consulting and compliance department, is well positioned to help lenders create written plans and create SPCPs. And we've actually already engaged with a few to do this work. And so, of course, this data toolkit is going to be extremely helpful in that. And so speaking of creating an SPCP and using the data and everything that goes with that, I'd like to invite Elsie to talk about the Beneficial State Foundation and the work that you have done.
Thank you, Lori. Yeah, so I'll share my screen. So just really quickly to start, oh, let me move that. just want to introduce myself. I'm Elsie Howard. I know some of you guys on this call already know me. I'm the associate lead with the Underwriting for Racial Justice program with Beneficial State Foundation. So our mission is to advance racial equity, you know, in and through the financial sector, and we are a owner of Beneficial State Bank. We, as in the foundation, not me. And so part of what we're trying to do is get lenders together to kind of replicate things that are working. And obviously, the SPCPs are one of those things. And since people aren't really making them at the rate that we thought, we were kind of like, well, what could we do? We know that there are lots of data toolkits, there's lots of different resources out there. So we started and made our own little template, and it's in our Underwriting for Racial Justice lender guide. So it kind of has like some prompts and some stuff of what you could do. So it's really similar to what Urban has on their site, but I didn't even know about Urban's when we made ours. So now that I know, I'm like, okay, I wish I had that information. So I'm so glad that all of you guys are here learning about it. But we noticed that people are still not really doing SPCP. So we were like, why not? And I kind of thought, well, maybe they don't know what it looks like, or maybe it's too hard, or maybe it's overwhelming. I know there's a lot of regulatory things that go into making plans like this. So I was like, I'll just make my own. And so what we did was actually go through and read. We had the privilege of 3 organizations sharing their full SPCPs with us. So I was able to read them all. And I kind of used those to inform what I did. So we read them, we looked at the guidance, obviously also, you know, the regulations and stuff. We looked at various resources, and I created my fake fictional bank, Cedar Hills Community Bank. And as you can see, I had to put fictitious bank here on the little image because lots of people were getting confused and thinking that it was a real bank, but no, it's just a sample for your guys' purposes. But you can most certainly take this and use it and look at it and kind of make it like a boilerplate on what you want to do. And so the process of what happened was I had the idea. I pitched it to our executive director. She's like, let's do it. Let's just run with it. So we thought it up. We figured out we wanted to do the Portland area. So we did a 3-county area in Portland, Oregon. We did it for a small business because we just kind of thought that would be a little bit more effective for what our purposes were, because we also do the lender pilot program, and more than half of those lenders are small business lenders. So we thought that that could be really helpful. So after I wrote it, I gathered feedback, sent it around to people that I knew, sent it internally. We kind of fixed it up a little bit, and then we actually got the privilege of having an interagency meeting. So we were able to have I think it was about 26 lenders, or not lenders, I'm sorry, regulators were actually on the call, and I got to go over there and present to them my special purpose credit program, explain my thought process behind it, explain everything that I did, and they gave me so much valuable feedback. And so that's where we're at now, which is our final draft. And so I just wanted to share with you guys all of the feedback that we got and the final result now. So the main takeaways from the interagency review, I guess, maybe not preview, review. And also just to put a little note that the regulators are unable to actually give you like a formal approval or like a blessing or anything like that, but they can help you with feedback and with giving you kind of direction and stuff. So I know a lot of people are sometimes weary of creating things and then not sure what the regulators are going to say. I would say work with your regulator to create this. There's no reason that you shouldn't involve them in the steps if you want to. In my experience, all the ones that I've talked to, they've all been very like proactive, very helpful, and like very, very, I think just like want to help you make stuff like this. So while they can't give you approval, they can certainly help guide you. And so the 2 takeaways that I had was to be very clear and very, very exact. So you might already know this if you're a regulated lender, or if you just work with lawyers or something, you want things to be very fine-tuned. And then also you need to spell out the nexus, excuse me, very, very plainly. And so that's where this data tool is going to come in into play. And I'll talk about that a little bit more. So for the first point on being clear and exact, for example, I was like, hey, I'm making a special purpose credit program. I want it to help as many people as possible. So I'm going to say classifications include, but are not limited to the following. But unfortunately, you know, if I put, but are not limited to, that could open the door for whoever. And while that's well-intentioned, we do have to unfortunately back up, you know, who we're going to be helping and why, and what we're going to be doing and how that's going to actually fix the problem. So that's why I ended up, instead of saying something more vague like persons of color or new Americans and not limited to, we ended up switching it to Black persons, Indigenous persons, and then Latino persons. So I kind of was doing a little bit backwards where I was like, hey, there's a problem and I want to help everybody. So let me start by helping everyone. But instead, what you should do is identify the gap, and then that will inform who the audience is. So that's also what's happening here with this tool. So it's going to be extremely helpful. So the other main part, the huge takeaway that we got was to really demonstrate the nexus and make it extremely explicitly clear. So on my first draft, also I'm going to put in the chat a website that's going to have my first draft and the final draft in there. So you'll be able to kind of compare and see what happened after we got feedback and what we changed. But we did have all the information in there to demonstrate why we wanted to make the changes and the interventions. However, there was no like actual section that demonstrated this is what the problem is, this is why it's here, this is what I'm going to do about it, and this is how it's going to help. So you want to end up putting all that information in there, and then also have another section that is just very clearly lining that out. You don't want to leave it up to like, you know, interpretation, or leave it to the reader to connect the dots. And so just to go over kind of a little bit on how to write the special purpose credit program, we're using this tool. Identification of a lending gap. Is there evidence that certain groups are not being lent to at the same rate? Spoiler alert, yes, there is. We already know that. But then also you're going to want to detail this, but also detail why it exists. So think about the 5 C's. What is going on in these qualification metrics that are not allowing people to get loans at the same rate? What are you going to do about it? Number 3, credit intervention. How is that going to help? And then what will you do to measure if it's effective? And then one thing I also want to state here is that if you make a plan and, you know, 6 months in, you're like, oh man, this is working, but I really want to add some more stuff, you definitely can do that. It's up to you if you want to adjust your plan as needed. You just have to make sure that you're documenting it and writing down what you're going to be doing. And so just wanted to connect this to the data tool. So for number 1, identification of the lending gap. Just as a really quick example, I know we already went through the data, so I don't want to bore you with all that again. But as we know, there's a huge gap. So we have white folks here on the top, we have all here on the top, and then we have Hispanic and Asian going up a little bit more, households of color, and then Black households here going down. So identification of the lending gap. Yes, we have one. So you're going to document this. Then you're going to document, why does it exist? Well, hey, look, now we're seeing the FICO scores. As you can see, we have borrowers of color, much higher prevalence of a lower credit score. And then here we have Black borrowers, 32.1% compared to 15.5% on lower FICO scores. And this is just an example market. You can do this with any of the markets. And as you saw, there's so much data. So this is just one little point. So if you want to say, hey, this is something that's going on, home ownership rate gap, this is one of the reasons because of FICO scores, then you want to say, well, what am I going to do about it? As an example, say, I know, and these are just totally made up numbers because I know this is not realistic, but if you require a 700 FICO score for your mortgage product right now, why not lower it to 600? Why not remove FICO scores altogether? But not to scare anybody. So if that's your example, you're saying, okay, I think that this could help. then you want to say this, and then you just need to be really explicit about how that's going to help. So for example, you want to say something like, hey, our standard minimum FICO is 700. 32.1% of Black borrowers have a FICO below 700, and that's only 15.5% of white borrowers. So because of that, twice as many Black applicants will not qualify for a loan, or they might qualify, but under unfavorable terms or unaffordable terms. So this is why we're making this intervention. We're lowering it from 700 to 600 to allow more people. So you just want to be very explicit of, this is the reason, this is why we're doing it, this is how it's going to help. And so, yeah, I just definitely wanted to show everybody that we have this written plan now. It's published, it's on the website, it's only 12 pages. So there's a lot of kind of people were saying, oh, it's going to be 300 pages. I don't know what to do. There's so many things that go into it. It doesn't have to be. Ours is only 12 pages. There was no feedback from the regulators about it not being long enough or it being too short or anything like that. So you can most certainly do something like that. And I'll put a link to to it in the chat as well. But I also wanted to leave time for questions. So I kind of ran through this a little bit quickly because I know we're coming up on the hour soon. So yeah, let me know if you have any questions. Oh, and also just a quick plug is that we talk about issues like this, special purpose credit programs, challenges to DEI, stuff like this about underwriting for racial justice once every quarter. And I wanted to take a second to invite all of you, and I'll put a link in the chat. So in case you want to sign up to come talk about stuff like this, you can get feedback, you can network with other people who are doing stuff like this, or you can just kind of learn and see what's going on. And I know I have some of the people here on the call right now who come to these meetings. So if you want to say if it's good, give it a thumbs up. And if not, then I'll pretend like I didn't see it.
Thanks so much, Elsie, for that. That was fantastic. I'll have to admit I'm going to need to revisit a little bit. I was frantically trying to answer questions in the chat while you were giving your presentation. So I did try to answer as many of them as I could. June, we have a couple questions here. Let's see here. Oh, I feel like a couple of them disappeared. Oh, you may have answered a couple of them,
Yep.
June. We might have been typing your answers while I was going through here. So it says, for housing wealth comparisons, how did you deal with mixed race households?
Okay, that's a good question. We can actually just provide. So what we did is usually we have a waterfall. So we define Hispanic. If we define this, if we saw this is a Hispanic, then we use a Hispanic first, and then so on and so forth. So that will be a waterfall used in our center. I'm happy to provide that information.
Okay, that's great. And we have another question here. That I guess is probably part me and probably part you, June, about if we have, the information in the resource is for MSAs. Are there plans to expand to state non-MSA? So at this time, I'm going to say we don't have current plans for that, but do you have any thoughts on having a whole state? I guess it's, a lender may have that in an entire state as their geography. So how would that look in this type of a data resource?
So currently, I think we only have the 50 MSAs because we discussed with NAFA, our funder. I think that's sort of our target for this version. We are still seeking fundings and potential opportunity to, do a little bit better job in terms of describing the SPCP, expanding the program, the analysis about this program. So I would say that's possible, but in the second stage.
Great, thank you. So Elsie, we have a couple questions here. One, and again, you may have touched on this in your presentation, about the data availability for small businesses. And then another question here It says, did you need to include a supplemental document that included tables and statistics, or did you only include tables within the document?
Good question. So to answer the first one, yes, this tool here is only for housing for right now, but definitely the data is out there for small business, and for any lending really. It just takes a little bit more time and a little bit more work, but I believe like firmly that everybody on this call can write their own. I'll just say that I got a C in college English and I wrote this, so you can certainly do it, especially if you have a degree, then you probably did better than a C. So definitely I would just start Googling. Just start Googling your area and start seeing what information is out there. And then based on your readings and your findings, it'll help inform what interventions you need to make and would be better. So for example, on our special purpose credit program, we initially had said that we were going to employ global cash analysis. But after doing further research, we determined that households of color oftentimes will use their own personal cards and other financing methods in order to finance their businesses. So we kind of thought that wasn't really fair to do global cash analysis because a white person is not going to have that kind of debt showing up if we do global cash analysis, however a person of color would. So for example, that's one thing that we did, that we were able to just determine based on the research that we decided to not do that. And then I think, what was the other question? I forgot already. About, yes, about the tables. So for me, I can actually just screen share really quick if you don't mind, to show you how I did mine. I didn't even, here, let me bring it over here so y'all can see. I actually just, oh no, why am I not screen sharing properly? Never mind. Well, anyway, to answer the question, I just wrote everything out. So it's in paragraph form. So I basically just put, hey, this is the statistics, this is what's happening, this is why it's happening, this is what we're going to change, and this is why. So I actually have no tables. The only table that I have in mine is an appendix that just kind of summarizes everything. And then I put a link to the chat, or I put a link in the chat that has the actual program there. So that way you can go ahead and take a look whenever you have a second.
Okay, perfect. Thank you for that. And yeah, I empathize with your plight there about school and education. The graduate statistics class that I took is the only class that ever made me cry. So I deeply appreciate my partners at Urban Institute who are great with the data. One question here I will go ahead and address: are SPCPs the only way to create down payment programs that are tailored to Black people specifically? So grant wouldn't be able to explicitly state is for Black people. It would need to be an SPCP. So SPCPs, of course, were made allowable by the Equal Credit Opportunity Act. So that is what governs what an SPCP is and who may create. So those are lending institutions that can create SPCPs. There are nonprofits, CDFIs, that have created SPCPs, down payment assistance. So those would be a little bit different because they would not be governed by ECOA. And so we do have on the SPCP Toolkit website a whole resource. We wrote a paper that provides best practices and guidance for nonprofits and CDFIs who would like to engage in this type of race-conscious programming. Let's see what else we got here. So what small business data at the broad analysis stage of SPCP assessment indicated that the lending gap was tied to fees assessed in order for the bank to match with its nexus of charging fees? That was a lot. I don't know if you got all that. How did your bank know that the fees you were charging was limiting credit or creating less favorable terms for the SPCP target group?
So for us, what we did there is we didn't really have a data or a proof that showed that it was the fees that was actually causing the barrier. However, what we did have is all of the income disparity information and data, and also wealth disparity. So based on that, we were able to demonstrate amount of savings, amount of capital available, and then therefore you wouldn't have as much money in order to apply or to pay for fees or to pay for a higher rate. And so therefore we're alleviating it by doing these things, AKA reducing the rate and waiving fees. And then also I just wanted to be explicit too that I don't think I noted this, but you don't actually have to use your own data. So if you are doing audits or doing your normal regulatory stuff and you're not seeing a lending gap, just because you're not seeing it doesn't mean that it's not there. And you can certainly use publicly available data. Even if yours is saying that everything's fine, technically fine, you can certainly just use publicly available data.
Now, is there an estimated timeline as to how long it takes to set up an SPCP for a nonprofit versus a lending institution? Are there current SPCPs that are being underutilized that we should be tapping into to support the communities that we serve? So I can kind of address that a little bit. The framework that a lending institution versus a nonprofit institution use to create an SPCP is a little bit different. The framework is a little bit more stringent for lending institutions. So in terms of current SPCPs, we are hoping, we would like for our SPCP Toolkit website to kind of be a broad repository for the programs, but there's quite a few of them that are operating very quietly, that we don't necessarily know about all of the programs that are available out there. And so, you know, we endeavor to keep the information on our website as transparent and as up to date as possible. So we encourage, you know, lending institutions, if any of you out there have SPCPs and you would like to include it on our toolkit, please send us the information and we will be happy to include it. So June, maybe, I'm not sure if you can address this one. Oh,
I can take this one. It says,
okay,
we are building a CRA lending program based on the borrowers that are at the low to moderate income level, or are borrowing at a low to moderate census tract. There's no race necessarily components to this program, but do you see banks documenting this loan programs based on the income and geography as PCP due to potential income geography being proxy for that? And this is actually a very good question. And this is directly linked to our Excel tool, which is the target market analysis. We actually have the criteria. So that is, if you directly just put the criteria for income, we have different buckets. So you can pick the LMI census tract and you can see what will be the coverage what will be the coverage for the household of renters. So it will be a non-white renters, household of color would be covered. And we feel that, you know, a combination, when you actually do a income as a criteria, you can see what will be the number look like for the target market. And maybe if you want to put more on the race side, and you can see the number going to change as well. So use the Excel tool will actually give some information about the coverage and especially the characteristics of the market.
Okay, that's perfect. Do you charge lenders to help them write an SPCP written plan? If so, how much do you charge? So unfortunately, I cannot answer that question. That is something that is done by our consulting and compliance department. So my colleague, Onisha, can talk to you about that. So if you'd like to go ahead and send me an email, I'd be happy to connect you to Onisha. We were trying so hard to get through all these questions. There's some really great ones here. So unfortunately, we can't get to all of them. I see one here about building a CRA lending program, credit card programs. That's interesting. We don't have any current specific guidance for credit card programs at this time. And then, okay, there was another one about consulting charges to lenders. Yeah, I'm going to say that most organizations are going to charge probably something to engage in this type of work. But, you know, there's a lot of resources that are being made available, in such as this data toolkit, such as written plans, such as great information. So we really want to try to make this as easy as possible for as many folks and as many institutions as possible to create these programs. So I see that Elsie has dropped her information in the chat in terms of her email address. And so all of us are available to answer questions. I did have some questions about having the slide presentations available, and I know that Urban Institute is willing to make theirs available. However, out of context, it may not be very helpful just to look at the static slides that June offered, really getting into the data toolkit and starting to use it and play with it and manipulate the data and look at the slides. That's really what's going to be the most valuable and the most informative. And of course, as June mentioned, her contact information is available on that site. So we've dropped the links in a couple different places to the SPCP toolkit, which is where you can find the data toolkit. And we are just a couple minutes over time, so I'm sorry we didn't have time to get to all the questions. Feel free to reach out. Again, thank you, June and Elsie, so much for joining us today. We really appreciate you taking the time. And thank you to everyone out there in the world for joining us. Take care. Bye.